Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, August 29th. It is 6:28 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. I got most of the equities toggling between down 0.8 and down 1%. I've got oil up 1%, nat gas up 2%. Not much happening on the macro front today. We've got some Dallas Fed numbers coming out, and Lael Brainerd speaks in the afternoon. Don't got a lot of earnings today on marquee names, so I'm going to let that pass. I thought JPOW's talk on Friday was one of the best public messaging statements the Fed has ever given. Now, I'm not a Fed watcher that goes back 50 years, but if you ever get in a situation where you need to deliver a speech, at the Rotary Club, at the baseball dinner, at work to address your co-workers, any kind of thing like that, re-listen to this speech because it's very well done, and there's some real key elements that I'll share with you. Have a simple message. State it cleanly without a lot of fluff. Use short sentences and keep it brief. If you do that, you're going to get applause. If you drag on and on, less so. So think JPOW, think the Gettysburg Address, 270 words, goes down in history. I think this JPOW one may go down in history. Really well done by JPOW. Regardless of whether you agree with him or not, it was very well delivered. I want to go through the high points. Stated again, bring inflation to 2%. We plan to forcefully use our tools. You should expect a sustained period of below trend growth. You should expect a softening labor market. You should expect pain to be inflicted to households and businesses. The labor force remains out of balance. We do not feel the long-run neutral rate is a place to pause or stop. We're going to keep at it until the job is done. Powerful. He told you what the goal was. He told you what they plan to do. He told you what to expect. And he closed with, we plan to keep at it until the job of cracking inflation is done. They're going to keep going. And I think at this point, you either decide if you believe them or you don't, and you act accordingly. I believe them. Go back to our late spring, early summer macro thesis, very rough macro thesis, and that is financial conditions are going to tighten. Liquidity is going to be drawn out of the system through the use of interest rates, quantitative tightening. The reverse wealth effect, make the market go down. He doesn't care about the market. He wants the reverse wealth effect to kick in to knock down demand. If businesses have to lay off people to achieve that, he's already basically said to expect that. And so our thesis was bear market rally. JPOW holds the high ground, and he's not going to quit. I think he reiterated that, solidified that in not only my mind, but the mind of the market. And so you can either get on the side of Jay Powell and the Fed, or you can decide to fight him tooth and nail. So I'll leave that in your court. Let's go through the charts quickly. Watch for a US dollar breakout. That would be a sign of tightening global liquidity. Don't forget, there's 3 meetings of the Fed between now and the end of the year. End of September, early November, and mid-December. Fed funds are sitting at 2.5%. You can pencil in 50 basis points, or you can pencil in 75. It probably depends on how it goes. But let's just say 150 basis points between now and the end of the year. That puts rates at 4%. I think that's going to ripple right on through the system. And I don't think there'll even be time between now and then for the Fed to get conclusive evidence that inflation has cracked. And I don't think, being down 1 or 2 tenths is going to, even if we're down like every month, down 1 or 2 tenths, I don't think that's going to be enough. I think they're going to want to get it, dropping full percentage points for multiple months, or as an aggregate, get it down towards 2% before they stop the process. So, and if that takes a recession it is. He's said several times that inflation is more important than jobs, and that's a big switch for Jay Powell. I think he thinks about the real economy a lot and the lower income distribution a lot. He knows inflation is hurting these families. It's probably hurting yours. I know it's hurting mine. So I think they're going to keep going there. So watch dollar for breakout. This was the counter trend move on Friday with, on a hawkish speech to see TLT pop up. Now, this is going to be a battle between rates and recession fears. If people put on a big recession fear trade, then you're probably going to see a bid to safety come in to TLT and then it pop up. But I'd be surprised if we don't at least come down and touch 108 for a test, and then you'd have a nice setup for a potential double bottom low. So, just manage your trade. I don't know where you exactly got in. You got the 8, 20, and 50 above as resistance, but with a little gap to fill here. So if you're short, I would be cautious of a bull cross right here on your PPO momentum. VIX blew out the top of 25. Now 25 becomes support. I've got a resistance band that goes all the way back between 29 and 30. Of course, if the VIX gets up there, then you're going to see that in all the charts. I think a good first move would be to come back below 25. But hey, if we're down 1% today, I doubt you're going to see the VIX go down. And don't forget about, and this is just short-term stuff, the potential for turnaround Tuesday, right? Bad selling on Friday. Bad selling on a Friday usually doesn't end on a Friday. We get a follow-through move today. Maybe they take it down a lot, or maybe they take it down a little, but then a bit of a relief rally tomorrow. So if you went into the weekend short, you should be in good shape this morning. Just watch it carefully for a snapback, and we're going to go through the levels in a minute, but I would not, just general market talk here, I wouldn't go, gonzo short at 3:30 this afternoon after we've already been down 2 or 3%, given we were down 2 to 4% on Friday. The market just has a hard time, just liquidating that without a little bit of a relief rally. Bitcoin's falling apart. Well, we talked about the break, the bear flag, and then the break. I'm going to be looking for 19,000. I think that's where it's headed. This was really a textbook move. Might have been frustrating because you see the time spent in that bear flag, but it never broke back above this top, this 22,000 level. And now you've got all the moving averages curling down and price below everything. I'd certainly have an alarm at 19,000. WTI didn't do much on Fridays, up about 0.5%. I'm still focused on this 200 here at 94.63. I think if it can get above that, then we could get some running room. NYMO came back down. This is another reason why I wouldn't go way out on a limb on the short side at the end of today, because this is going to be, if we start out down 1% and we sell off another 1%, you're going to get overextended on the oscillators, and then you'll be adding puts right at the point where it's gonna most likely reverse for a bounce. Same thing with NAMO, back down to minus 41, heading lower. Big mark on the chart. You can see here on Friday we opened marginally higher. First half hour of trade. That PCE number came in a little better than expected. That got people optimistic. And then JPOW at 10 o'clock, and they just reversed it the whole day. It cut through our 415, cut through 410 like it wasn't there, cut through the 50 like it wasn't there. So today, I think the 50 is a good level to keep on your charts. And I think this 403.50, something like that. You're going to have a little bit of support there, but then your big support doesn't come in down towards 400 and then 395. All the levels that we had just wrestled with before, the run up. You can see here on the 60-minute chart, we broke below our main level of support. Now that is resistance. Got a little bit of an air pocket down to 402. And then we've got a larger volume over price bar at 395 with a gap at 394 as well. So definitely looks to be heading lower. Just if you're actively trading, just be aware of where these potential bounce layers may be, and I would mark your 50 EMA off of the daily chart here at 407.50. Right here is the 50. If you get a breakdown and then a kickback rally that recaptures the 50, that would be a good place to certainly cover any shorts that you had, or possibly even get long for a bounce. So, but remember, this is going to be heavy treading on the upside through this high volume overprice congestion area here between 410 and really all the way up to 415, but most especially 412. The Qs really let go, but have not broken our this little support area we have between 305 and 310. We've also got an uptrend line here that could come into play rather early in the day. I looked at price, and price was sitting at 305 in the pre-market, and I wouldn't be surprised if the bulls come in and try to make a little defense there. But if you see a little bounce, let's pull it up here, a little bounce off of 305, and then it comes back and fails, a break of 305 would be, I think, a good short, especially if you get a bounce first and then have the trend line and this 305 break. So I would be looking on the short side if this trend line were to break down, and keep in mind where you've got the gap. IWM, I mean, it was off 3%, but still in the best shape, really, of the indexes. Why? Just now breaching the downtrend line, and you've got the large volume over price bar here, and you've got the 50 EMA coming in right at 187. So I think 187 there at the 50 would be a good place to potentially look for a bounce today. But if it breaks that, then you're back below all the moving averages and in a bearish posture for sure. Here you see it. Here's that large volume over price area. This was support, and now it's resistance. So below 90, I think it's open down here to this 187 area, where you may get a bounce off of the 50, and then we've got a lower trend line that comes in down around 194 that may have some 184 that may show some support. Meta, few fake breakouts, ultimately back below the midpoint of this consolidation range at 165. I think that's your pivot for lower, and you've got to have your eyes peeled at 155. Let's look at it here. Yeah, 155 is the bottom of this big trading range, and if you got a break below that, then it opens up a whole new downside range. In fact, the width of that range is from 155 to 172, so that's $17 wide trading range. That would be the measured move target if price were to lose 155 on Meta. Apple, still in the best shape of all mega cap tech. Why? well above the 200, well above the 50, but in a bearish posture because we got a bearish PPO cross. We lost trend on RSI. We lost the high volume over price bar here at 166. And now it looks like there's room to come down into these lower areas here. 161. You got the 50 coming in at 159.50, and that's right where a gap is. So I wouldn't be surprised to come in here, test the top of that gap, test the 50, and then get yourself a little bounce. Here we are on the 60-minute chart. You can see that even if you didn't on Friday, this is the 10 o'clock bar here, the big one. Even if you didn't fully realize what was going on as far as a downside move, $168 would have been an area to have alarmed. And for sure the gap, I missed all this, and I was short for the gap, and then at the end of the day rolled that down. So I'm still short. What I was looking at are these, one, bad selling doesn't end on a Friday, but two, little hole in the chart, maybe come down here to 162 or something. But then you got a big move lower for this gap here down at 159 and a half. Tesla. Holding it together pretty well. I mean, kind of like Apple from the standpoint that it's above the 50 and the 200. Of course, we had the split. Here's your high volume over price bar, and you've got support at 285. Now, I looked pre-market. Stock is sitting right on the 200 at 280. So I think that's going to be your pivot here this morning. And one thing I did was, we had this double top look up here. If we were to break 280, which goes from the high to the low, here's the, it's not perfect, but here's the left side of the inverse W. Here's the middle. And now we're starting to build the right side of the inverse W. The measured move on a break of 280 puts it down at 252. And you notice we got a gap here and a larger gap here, and really a lot of air in the chart. You got a gap here and then another void here. So once it, when and if it does lose 280, loses the 200 EMA, loses the 50 EMA, loses this volume over price ledge here, then it could go fast, come down here towards the 250 level. Microsoft, bad day at the office, 4%. You don't see that very often on a stock like Microsoft. Lost the 200, lost the downtrend line, lost the 50, right down here to 270, which was a really important place back on the chart. Resistance, resistance. We'll call that resistance. We'll call that support, support, support. So below 270, this is vulnerable to go back down into the low 250s. Now you do have an uptrend line coming in here around 265. Let's take a look on the shorter term chart. We're down below 270. Here I've got that trend line coming in at 260, and I've got some support here at 264. So I think if you're a swing trader and you're looking for an entry short on Microsoft, if you were to see, like a bad morning of selling, but then a kickback rally into 270, that would be a great place, because then you could have a stop pretty short, a stop nearby where you could get a pretty good entry on that, and then look for lower down the road. Amazon, almost 5% down. You see the 50 coming in at 129.5, but you also see price in this big gap. We had talked about, even if you didn't do any of this, alarm that gap and make sure you're short for that gap. So you should be short if you are interested in playing it. The level to watch is 129.50. That would be a classic break into the gap, bounce off the 50, come back to 132, and then fail. So if you saw that and you missed that entry on Friday, I would certainly be hitting it short somewhere between 132 and 134 on any kind of a kickback rally. Google looks a lot like Facebook, down below the midpoint of this big trading range. It was never able to recover that 118.50 that we've been talking about. So now we're below the midpoint at 111. I think it's going to come down and test 106. If it breaks 106, then it's the width of the trading range. 106 to 118 is 12.5. 12.5 from 106 is, what is that, 94? Something like that. That would be your measure move target on Google if it were to break 106 to the downside. Netflix actually, it was off 4.5%. It's deceiving on this chart because it's so compressed, but we're right at the high volume over price bar, and we're sitting right on the 50. If you got to break a 220, I think you can almost pencil in a move to 205. And if the thing falls apart, back down towards the bottom of this box at 165. Remember, we went out. Now, if we come back and go into the old trading range, the target becomes the bottom of the range. So 40 from 205 is 165. And then this would be a big bull trap. Semiconductors, real bad day at the office, down 5.5%. The thing to notice here that sticks out in my eye is you see the big value area from 247.50 down to 226. All the big cluster of high volume over price bars. Well, now we're below that. So anything below 226 leaves the door open for much lower prices, because now look at the big drop off in volume over price support. You've got a big ledge here. So got a little support here at 218, let's call it. Maybe we can see that better on the 60-minute chart. Yeah, we've got a gap here, and then at 218, we've got some support. And then we've got another gap from 216 down to 213. So if you miss this one, and you got a kickback rally into 227, 228, I'd be trying a short there and figure on this failing. So that's your high volume over price bar. You can see it there. I don't think this, I mean, it could. You got to be ready for it. But I think the max bounce on this is back to the trend line. And then it fails there. But you just have to see. But I think semis are heading lower. Not going to spend a ton of time on ARC. But I think I've said it before. This has got to be just a devastating climate for ARC. Continuing to ratchet up interest rates, watching that 2-year go up and up and up. A lot of marginally profitable companies trading at really high valuations still, even though they've been whacked. I think this is just going to be a devastating environment for the ARC names and all those bubble Ponzi type names, Carvana, all that kind of stuff. So you may want to focus your attention either on the baskets or look for individual names. Now here we're just re-entering this old consolidation range. I think ultimately it finds this bottom of the prior range down here towards 14.5, and then we'll see if that breaks. ARCG, I think 38 remains your pivot point. Lost the 50 on Friday, still well below the 200. I think this comes down, breaks 34, and ends up coming back for another test of this 27 range. ARC-K, losses 45, 45.50, pivot on Friday. Now is coming down towards 41. I think there's some support there, but ultimately I think this is going to come down for another check of 37 on ARC at the prior lows. Actually, it's not even on this chart. It's so far back, but I think the ARC type names are going to have a really, really hard time in this environment. Well, we'll have to wait and see. But yeah, 46 remains your pivot. And ARC-W sitting right at the midpoint of this trading range. If you lose 52.50, then you're going to the bottom of the range at 46 right here. And then you've got from 46 to 58. So that's like $12. That will be the width of the measured move if this were to break. So, yeah, I mean, I think the thing to keep in focus now is not jump to, right away. Oh my, you're going to see a big debate today about, I told you so. And now we're going to fresh lows, back to June lows, all that kind of stuff. Don't worry about that. Just worry about getting good entries on whatever stocks that you have. You can lean bearish on tech and high valuation stuff. You don't need to know at this point whether, oh my God, I'm penciling in the June low and, I'm going to put all my eggs on whether we break that or not. Don't worry about it. we got a long ways to go before, we get down there. And if we get down there and we've been watching level to level, then you will have made a lot of money by the time we get down there. So, just using, let's just go back to SPY daily. The June low was 365. We are 40 points above that, right? 405, 365. We got a lot to do between there and the low, or here and the low. We got another big value range here. We've got a big level here at 390 that took a month to get through. So there's going to be a lot of trading between now and then, but just keep in mind seasonality. September's usually a junk month. We know October can be a junk month. Then we got the November election. God knows what that might do to the stock market. It might be a big positive. It might be a big negative. But, that's 2 months down the road. So don't get too far out of your seat, trying to see way down the road. I think we've got enough information, at least I do, to have a bias. I'm biased to the short side. JPOW's not going to quit. He's got the high ground. We haven't seen inflation crack. He's not worried about the labor market. He's not worried about the housing market. He's not worried about the stock market. What more do you need to know? It's either that or you think he's a liar, that he's not going to be able to do it, that he's going to cave in and pause at some point along the way here sooner rather than later. I just don't think that's going to happen. Areas that I'm bullish are, in general, energy. You might see a bid come into value, a bid come into staples, safer type stuff, utilities. So those are going to be some areas that I'm looking at. Oh, also agricultural commodities, fertilizer, corn, soy, wheat, the agricultural type complex seems to be perking up quite a bit, and metals and mining, that kind of stuff. So let's keep an eye on the chart. I'm going to be flipping through some charts today, and I'll send you any setups that I see worth mentioning. So let's see how far they take it down today, and if they try to put in a healthy bounce ahead of the close. I think that's going to be the most important thing. So let's wrap it up there. Hope you liked the video. If you're new to the channel, thank you so much. Hit that subscribe button and the alarm bell, and then jump over in the show notes. There's a link to the blog site where you can drop in your email address and register for all my content. But anyways, let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.